Good morning, traders. I hope we all had a fantastic weekend. My name's Aaron Hill, and this is our next delivery of our Technical Talk series on the 2nd of May at 8:34 a.m. UK time. I know for most of us based in the UK, it is the May Day bank holiday, so I hope we're all still nice and relaxed and enjoying the not so nice weather. We also have Chinese banks closed in observance of Labor Day today. Actually, banks in China are closed Monday through Wednesday for Labor Day. Whilst we also have banks in Japan closed this week, Tuesday through Thursday, in observance of, I believe it's Constitution Day, Greenery Day, and Children's Day. Now, in terms of where we are in the markets right now, so look, Asia Pac equity indexes, as you can see, closed lower across the board. Notable losses were in the Australia's ASX 200, down by 1.2%. Now, in terms of where we are in the European cash markets right now, look, as you can see, do note, obviously, the FTSE is closed due to the bank holiday, but we've opened considerably lower this morning. So it's a risk off scenario right now. So look, as you can see, Germany's DAX 40 is down 0.8%. France's CAC 40 is down by 1.2%. And of course, Euro Stoxx 50 is down by 1.5%. Now, US equity index futures, surprisingly, it's higher across the board right now. So the Dow Jones, S&P 500, and NASDAQ futures higher across the board, roughly about the same level, around 0.6%, 0.7% higher. Now, in terms of where we are in the currency market, so we're looking mainly at the major currency pairs right now. So euro dollar, Aussie dollar, dollar yen, and pound dollar. Pretty much, look, the dollar yen is up by 0.3% this morning. And the New Zealand dollar is down at 0.3%. So look, other than those two currency pairs, we're not really seeing much in terms of movement in early European trading right now. Just a quick look across the crypto market, just really quickly when it loads. Okay, so look, as you can see, the crypto market is higher right now. Look, Bitcoin still remains below the key 40,000 level. We do have a chart on that shortly, but look, we are higher across the board right now, with Bitcoin up nearly 3%, Ethereum against the US dollar up by 3.3%, Litecoin up by nearly 5%, and Ripple up by more than 6%. Now, if I just go through the events really quickly for the week ahead, just bear with me. So look, Monday is within the next few minutes, as you'll see here. We have German manufacturing PMI. That's due in 17 minutes. So this is a key watch for European traders. Later on today at 3 p.m. Now, guys, just as a reminder, this is GMT +1 time. So this is the current time in the UK right now, 8:38. We do have US ISM manufacturing, the US ISM manufacturing PMI due at 2:45 p.m. So this is something to keep an eye on. Now, in terms of Tuesday, we kick off bright and early with the RBA's interest rate decision and the RBA rate statement. As you can see, we do the market does anticipate a move higher in rates. Now, look, in terms of later on that day, we do also have the US JOLTS job openings down here at the 3 p.m. This is a key watch for many traders. And later on, we also have the quarterly New Zealand dollar, the New Zealand employment change and unemployment rate. Now, kicking things over to Wednesday, this is a significant day for the markets, really. Not only do we have the US ADP non-farm employment change at 1:15 p.m., and also the US ISM services PMI at 2:45. Later on that day, it's between 7 p.m. and 7:30 p.m., we have the Fed interest rate decision, and obviously the press conference and FOMC statement. Now, in terms of the Fed, markets anticipate the central bank to raise rates by half a point on Wednesday, and also again in June. Of note, also for the press conference, this will be Powell's. This will be Powell's first post-meeting presser held in person since the pandemic began. Now, in terms of where we are on Thursday, much of the focus will be focused on the Bank of England. Now, much like the US Federal Reserve, the Bank of England are also anticipated to kick rates higher by, as you can see, 25 basis points. So this will be a key watch on Thursday. Now, finally, on Friday, of course, I'm sure this needs no introduction. We do have the US employment situation report out at 1:30 p.m. Now, more commonly referred to as the non-farm payroll. So do keep an eye on that on Friday. Now, just let me just bear with me while I switch things over to the charts. Now, beginning with the euro dollar. Now, the main focus for me is on the weekly time frame, daily time frame, and the H4 time frame. Now, weekly Quasimodo supports between 0.467 and 0.517 will remain a key talking point this week, I believe, as will the daily time frames 100% Fibonacci projections at 0.494 and 0.526. Now, for any harmonic traders watching, they will note that these are also AB equals CD formations. But, you know, with AB equals CD formations, I do prefer to see these against the prevailing trend. As you can see here, we are with the prevailing trend. So look, it's just additional support that's, as you can see, supporting the weekly Quasimodo support level at 0.517 mentioned above here. Overall, though, this market is rooted within a decisive downtrend and has been since the beginning of 2021. Therefore, this may influence any bullish movement from the weekly Quasimodo supports and the daily time frames 100% Fibonacci projections this week. And you know what this really does is throws light on this H4 prime resistance at 0.680, 0.640. Now, do bear in mind that this prime resistance is also accompanied by a 38.2% Fibonacci retracement at 0.649, alongside a 1.272% Fibonacci projection at around 0.654. Now, for any harmonic traders watching, this would be considered, according to Scott Carney, I think this is the gentleman who coined this, who invented this this pattern, is an AB equals CD alternate formation. So it's an extended D-leg into the 1.272% Fibonacci projection. Look, it's just additional confidence at this prime resistance should we push higher on the euro. Now, over on the Aussie US dollar, look, prime support on the weekly time frame has really taken a hammering over the past week. We were down over 2.5% last week, and prime support is really struggling at 69.48, 72.42. Now, interestingly, we did note in the previous technical talk on the daily time frame here, should we break this support at 71.65, we are likely to head over to this familiar daily decision point at 69.64, 70.40, which is nestled within the lower side of this prime support on the weekly time frame. This is a key area to be watching, and a bullish attempt from this zone, from the daily zone, is anticipated, which, as you can see, is occurring as we speak. And this is largely due to having seen the RSI touch gloves with oversold territory on the daily time frame. Though whether it creates enough momentum to establish a recovery from this daily area is very difficult to envisage at this point. Now, in terms of the lower time frames, we have remained below the 71 figure in Asia, and now early European hours are testing this support at 70.38. Which is effectively marking the upper boundary of this daily decision point. Now, so really what I'm looking for at the moment, I do believe that we will see buyers attempt to come in from here, but I don't see anything beyond this resistance on the daily time frame at 71.65. Ultimately, I do believe we are heading lower on the Aussie dollar. Look, if we do reclaim the 71 figure on the H1 time frame, then I will be watching this prime resistance at 71.65, 71.36 very, very closely, as I do believe that there will be some active sellers present at this point. Okay, onto the dollar yen. Look, both weekly and daily charts continue to echo a healthy bullish vibe at the moment. The weekly time frame, as you can see, reveals scope to approach 135.16. This is the 28th of January, 28th of January high, all the way back from 2002. Now, in conjunction with the weekly timeframe's clear upside bias, we also recently formed a bullish flag on the daily timeframe. And as you can see, we broke out late last week, decisively broke out, I might add. Now, the take profit target is derived from the beginning of the up move. So this is the pole, which many technicians refer to it as. We can just take measure the value of this pole and just simply extend it from the breakout point to derive a profit objective. Now, interestingly, this profit objective sits just above this this high on the weekly time frame. So we could be in for much higher prices should daily supply at 131.93, 131.10 give way. Now, interestingly, on the short-term charts, we have the H1 candles recently reclaimed 130 to the upside. Now, given what we're seeing on the bigger picture, I wouldn't be surprised to see 130 hold as a support should it be retested. Now, should this be the case, we could see another move back up to the 131 region and even an attempt to potentially move higher from there. Now, for me personally, I'm not really paying too much attention to the RSI right now because, look, during strong up moves, the RSI can remain within overbought territory for prolonged periods. Now, what you can see here is we have a potential double top formation in play, and this is the neckline around the 67.10 mark, the 30th of March-ish, I guess. So if we do break below there, though, if we do decisively push below here, I wouldn't be surprised if we hit this familiar support zone at between 40 and 50, which, as you can see, has really provided a temporary oversold area since the trend began. And this is very common viewing within the RSI. So price rarely makes it below the 40 mark during strong up moves. Okay, onto the pound dollar. Look, Friday's reaction from this is I believe a 61.8% Fibonacci retracement at 25.02. This, as you can see, we did snap a clear losing streak on that day, and whether this is enough to entice further buying in this market is still difficult to forecast, because look where we are on the bigger picture on the weekly time frame. We are considerably lower on the weekly time frame, and we also took out this support at 27.19. Now, this is a clear support which could potentially now serve as resistance. And we also have room to push lower on the weekly time frame to around the 21.64 region. So really, for me, I would be very surprised to see the pound overthrow the 27.62 Quasimodo support term resistance on the daily time frame. Right now, as you can see on the H1 time frame, we have remained south of 126 in the early stages of trading this week. Downside pressure could and we have also shook hands with H1 demand at 25.45, 25.27. Below here, of course, is the 125 figure. I do not feel traders will want to commit in this market until sellers, will not want to commit until we crunch below the 125 figure, given that we are coming from a daily Fibonacci, a key daily Fibonacci support. Now, if we do reclaim 126 to the upside, then I will be obviously watching this decision point at 126.97, 26.68 alongside this H4 resistance at 26.50. So the H4 resistance comes in just below this decision point. So between these two areas, look, if we reclaim 126 to the upside, breakout buyers are urged to pencil in the H4 resistance as well as the H1 decision point, as given where we are coming from on the weekly time frame, this could be a sign that we could see notable moves derived from the short-term areas. Now, just really quickly on Bitcoin. Look, Bitcoin is quite an interesting chart at the moment. This is the daily time frame. The focus is on this falling wedge. Okay. Now, I understand that in order to qualify as a defined falling wedge, as a reversal pattern, there must be a prior trend to reverse. Ideally, the falling wedge will form after an extended downtrend and mark the final and potentially mark the final low. Here we clearly have downside movement from this point here, but really here, I know it's not really much to write home about, but and it's not really enough to say that we have a clear-cut wedge present. But in the near term, what it does show is downside momentum is really deteriorating. So with that being said, we also have the RSI bottoming at support from 35.08 and price action also testing and ascending support alongside volume declining, alongside a volume decline. So this really gives me a good indication that should we break out of this half-hearted wedge, if you will, then we could potentially see price head for the resistance area at 45.828, 43.972. Now, in terms of where we are in gold, it's really a Fibonacci-friendly market right now. So as you can see, we did test support at 1877. Now, this support also had a 61.8% Fibonacci ratio, as well as a 50% retracement, accommodating that support. And as you can see, we did bounce late last week. But look, really, we formed a shooting star candlestick formation on Friday. And for any candlestick traders, they will note that this is a bearish formation. Should we come below this support, now this is where it becomes interesting. Here we have a potential, I believe this is, just bear with me, a Gartley pattern. We have a Gartley pattern present. Should we come below this support, we have a Gartley pattern present between the 100% Fibonacci. So this is what's known as a potential reversal zone. So I'll just draw this in really quickly here. So between the 100% Fibonacci projection at around 1815. Now, the 100% Fibonacci projection actually denotes the equivalent AB equals CD formation alongside the defined 78.6% Fibonacci retracement at 1843, as well as a 1.618% Fibonacci extension coming in around the 1817 mark. Now, we also have trendline support aligning with this area, as well as a descending support coming from the high of 1916. So with all this confluence at this point, alongside the 200-day, if you can see it within, I think it's the 200-day. Yes, it is. The 200-day, let me just highlight that. The 200-day simple moving average really closing in on this area. I do believe this is a strong area of support should this support give way. Now, if we do defend this support, I will be now watching the 50-day simple moving average to form potential dynamic resistance, as well as there should be a resistance area. Sorry about that, guys. A resistance area at 1915, 1974. Now, that's a wrap from my side, traders. Thank you so much for taking the time out of your day to join me. Now, in terms of questions or comments, please do fire them away. Fire them over to either Market Analyst at fpmarkets.com, or alternatively support@fpmarkets.com. Have a wonderful week ahead, and I'll catch you bright and early on Monday morning. Thank you so much. Bye-bye.